Welcome back, traders. Today, we're going to go over the Ichimoku Cloud system. Now, this is a pretty complex system. It took the guy 30 years to create it, so don't feel bad if you don't completely understand it right away. But I'm doing my best to show you guys why some institutions use nothing but this for all of their trading systems. Real quick, before we get into this breakdown, I just want to show you guys a screenshot of the brokerage account that's behind Asymmetric Edge. You can head over to the website. There's videos of me logging into the brokerage account and check it out for yourself. It's all verified. It's all legit. But let's get into this Ichimoku Cloud system now. Like I mentioned at the beginning of this video, there are traders on the trading floor who use nothing but this system. No RSIs, no MACDs, no unnecessary noise. While I'm not one of those purists, I respect the math behind it because Ichimoku is one of the only true leading indicators in the market. It doesn't just tell you where the price has been, but it actually maps out the institutional gravity of where it's going to go. If you don't understand the basics of the Ichimoku Cloud, you might want to go to another video first and then come back to this one. Today is for the snipers. I'm going to show you a 4-point clinical entry system that filters out the retail noise and keeps you on the right side of the Dow 50K volatility. If you want to trade like a business, you need a process that is repeatable. I'm going to show you that process. All right, let's clean the slate a little bit. Let me break down the system for you guys. We're going to start with just a conversion line here. Zoom in a little bit, make it easier for you guys to see. Most traders fail just because their screens are cluttered messes of lagging junk. So we're going to stay hyper-focused here. First up here, we have the conversion line. It's this blue line you see going across my screen. How it's calculated is it's based on a 9-day high and low. It's what most traders call the fast line. It represents the immediate sentiment of the market. Now let's go over another line. Next, we're going to leave just the baseline on here. The baseline is this red line that you see going across my screen. This is based on a 26-day high and low midpoint. Think of this line as the slow line, or static gravity. When price moves too far from the baseline, it's like a rubber band stretching. Eventually, the math dictates a snapback closer to this mean. Next up, we have the cloud. Let me go up here, turn just the cloud on for you guys. Zoom out a little bit more. This is where a lot of people get confused. You see, it flips from green to red. The green and red spans you see are actually a projection of the conversion and baseline shifted 26 periods into the future. It is a literal map of future risk. If price is inside the cloud, you're in no man's land. No trades, no guesses. We wait for a breakout into clear air. So back here, when the cloud flipped from red to green, it's actually saying that 26 days from this point, the market will be bullish. Same thing back here. Once the cloud flips red, it's projecting out 26 days. So keep that in mind. Now I want to talk to you guys about the most overlooked part of this whole entire system, and that is the lagging span. Let me turn these on for you guys. All it really is price shifted 26 days backwards. Most retail traders turn these off because they think it's messy and they don't want to know what happened in the past. A lot of times, that's a 6-figure mistake. The lagging span is your filter for fakeouts. If you're looking at a breakout in NVIDIA or the Dow or whatever it might be, the lagging span is still trapped below past price action. That means the breakout is a lie. The institutional absorption hasn't happened yet. In this clinical system, the lagging span is the final green light from the market's history. We don't want to trade without it. Let me turn everything back on for you guys. I know it's kind of messy, but it's really important. Here's a quick checklist for you guys. If all 4 of these criteria aren't met, there's no trade. We don't gamble, we just execute on math. Number 1 is price must be outside the cloud. If price is somewhere in this cloud, we don't trade. We want clean trends only. Number 2, the lagging span must be above price for a buy. It needs clear air to run. Number 3, leading span A must be above leading span B. Green over red always. The future outlook must be bullish. And number 4, the conversion line must be above the baseline. The fast momentum has to be leading that slow static gravity line. When these 4 points all align, you have a high probability asymmetric setup. You aren't guessing that the Dow or whatever you're looking at is going to go higher. You are confirming that the institutional structure has shifted in your favor. Getting in a trade is easy. Staying in and knowing when to leave is how you build a 7,347% return. We don't exit based on fear. We exit based on signs of underperformance. The first sign of trouble is the lagging span dropping below price. So if you look at Microsoft here, this green line back here is the lagging span. And you can see it cross under its price back here in October when Microsoft was around 500, 515. And if you look at it now, Microsoft is now all the way down at 400. But the Ichimoku Cloud system warned you back around 500 that the future wasn't looking too bright. But again, when the lagging span drops below price, it's just a warning. The second sign is when the conversion line breaks below the baseline. So again, if you guys remember from earlier, the blue line here is the conversion line. The red line is the baseline. So back here in November is when the conversion line crossed below the baseline for Microsoft. Right here where the blue line, I'll zoom in, where the blue line crosses below the red line. So this mixed with the lagging line being below the price is a sign to get out. And again, Microsoft was trading around $500 at this point. You saved yourself 100 points right here. So again, real quick, if you see these two things happening, the lagging span dropping below price and the conversion line breaking below the baseline, you know the math of the recovery is no longer on your side if you're long. You close the trade, you take your profit, and you go back to the drawing board and find your next trade. You don't sit there and hope it turns around because now you're down 100 points holding onto a bag. You need to trade like a business, no emotions. Now, this was just a quick, more in-depth breakdown of the Ichimoku Cloud system, but this is a complete system. You can spend years mastering just these 4 points, or you can join a trading floor where we map out these levels together every morning before the bell. I could go on and probably make hours and hours of content over the Ichimoku Cloud system. So if you guys want me to break it down even more and go into each point of it even more and in depth, just let me know in the comments down below. We currently only have a few founding member spots left on the Asymmetric Edge community waitlist. The rate is $49 a month, and if you join now, you're grandfathered in at that price forever, no matter what it scales to or what the price goes to. I'm building this for traders who value clinical results over hype. So if you think that's you, click the link in the description and get your name on the waitlist, because that next and last batch of founding member spots will be going out soon. If you found any value in this breakdown, share it with another trader who is tired of losing money to this AI snag. Stay disciplined, and I'll see you on the floor.